European shares rose on Tuesday, boosted by better-than-expected Spanish and German inflation data, as investors focused on the ongoing COVID-19 outbreak in China. By 3:40 Eastern Daylight Saving Time, Germany's DAX was up 0.2%, France's CAC 40 was up 0.3%, and Britain's FTSE 100 was up 0.8%. China reported on Monday that the number of daily infections fell for the first time in more than a week. Separately, the country's National Health Commission said on Tuesday it would propose measures to speed up vaccinations for people over 80, a vulnerable age group where more than a third remain unprotected. The measures come as public anger over the country's severe COVID-related restrictions sparked widespread protests over the weekend and fueled speculation that the Chinese government is considering scaling back its anti-COVID policies. In Europe, Spanish consumer inflation rose 6.8% year-on-year in November, compared with 7.3% the previous month. Elsewhere, North Rhine-Westphalia, Germany's most populous state, reported that consumer prices fell 0.8% for the month, well above analysts' expectations for a 0.2% decline and in stark contrast to October's 1.2% rise. All of this reinforces expectations of a broad slowdown in European prices ahead of the release of preliminary Eurozone inflation figures on Wednesday. European Consumer Price Index year-on-year coming soon, November 30, 2022 forecast, 10.4% previous, 10.6% November. Eurozone inflation is forecast at 10.4% in November, down slightly from October's 10.6%, but the figures suggest a larger decline is likely. However, European Central Bank President Christine Lagarde said on Monday that inflation in the region has yet to peak and is likely to be higher than currently expected, suggesting a rate hike is imminent. In company news, EasyJet shares fell 3.8% after the low-cost carrier posted a full-year loss and cancelled its 2022 dividend as it was hit by rising fuel costs, whose impact outweighs the recovery in passenger demand. Crude oil markets have struggled recently as rising COVID-19 cases in China, the world's largest crude importer, have meant the reimposition of strict liquidity restrictions, weighing on economic activity and, in turn, crude demand. At the same time, another major source of energy demand, the European and American economies are rapidly heading into recession. That sent crude prices below levels triggered by output cuts in October by the Organization of the Petroleum Exporting Countries and its allies OPEC+. U.S. crude futures were up 1.8% at $78.63 a barrel by 3:40 Eastern Time, while Brent was up 2% at $85.59. Elsewhere, gold futures rose 0.7% to $1,755.30 an ounce, while EUR/USD rose 0.5% to 1.0385.